Welcome back to Stocklabs for another market recap. This is for the week ended January the 28th. It was a crazy week for the markets. There was a lot of back and forth, like ups and downs, back and forth action with some huge ranges in the indices. We did say, or I sort of said on Friday, that if you saw weakness early in the week, you kind of just had to maybe just close your eyes and buy it and manage it from there. We did. The weekly low ended up getting set on Monday, although that doesn't mean, we didn't go straight up from there. It was very choppy and there was a lot of whipsaws back and forth. We did almost sort of test those lows a couple different times the rest of the week. So it was looking dicey for a long time, basically the whole week until we sort of got saved on Friday. Apple had reported their earnings, it was good. We also got sort of a favorable inflation number Friday morning. So, the market opened strong on Friday, choppy again, but then ended up finishing really strong as well. So it looks a little hopeful into next week, although we may not be out of the woods quite yet. As for how, the week overall turned out, so we've got S&P up 0.86, Dow up, leading up 1.3 almost. NASDAQ ended up finishing flat, and small caps Russell was trailing down almost 1%, down 0.9. Gold got whacked, and bonds are still sort of hanging in here. So they're not doing too bad here. I have been sort of looking for a bottom in this TLT for a while, but it is sort of chopping along here in this little recent range it's had the last couple weeks. And then as far as our leadership stocks went, it was kind of I think it was kind of a mixed bag with these ones. There was obviously so I mentioned Apple, and it ended up, it was flat coming into earnings for the week, and then it was a little down coming into earnings for the week, and then ended up finishing up 5% with a big Friday. Microsoft also had reported, a few days back, and that's been strong sort of since. They had pretty good guidance, looking forward, and the rest of them. Yeah, so the rest of them were kind of, Google is always sort of seemingly under the radar compared to the other ones. It's kind of just there, and then always having somewhat decent performance. Nvidia soft, Netflix soft, although there was news that Ackman at Pershing Square, I think he got long, I don't know, something like a few million shares or so. So he's trying to mark a bottom in Netflix. And then Tesla got smoked, down 10% for the week, is now, at 850. I forget what the high was, but this has got to be at least 35% off its high, which for a stock that size is notable. Okay. So, and then overall, on average, they were down. So that's also something to note. There's still overall distribution going on in this group. As for our industries, just to see what our breadth was like, the breadth was not good. So even though the indices sort of got their head a little bit above water by Friday, the damage under the surface is still, the stocks under the surface are still taking hits. So it is still difficult to sort of find sector trends other than, really basic materials, which were they were flat this week, which is more or less in line with the market given the overall volatility we've seen. But basic materials have been kind of the only reliable uptrend out of everything. Even financials have started getting hit with the yield curve flattening out. So yeah, healthcare always down. Tech down, but given the volatility in the Nasdaq, it's not surprising. Maybe you see a slight rotation back into tech, but I think there's a lot of work. There was a lot of work to be done there to sort of reinstill some confidence in that trade. As far as on a cap basis, so down 1.3% for mid caps or smaller mid caps, and down 1.22% for mid caps. Large caps were down 0.6, so not horrible, but and mega caps down 1.2%, and our Terra caps barely up, so up 0.3. You can sort of see that the performance skews slightly better for the larger stuff still. I mean, obviously, everyone's probably looking at the Russell chart, which has just been cliff diving, and that's really holding back. Anything under this sort of 50 billion range is just going to be a total crapshoot while the action in the Russell is that bad. If fund flow starts shifting back into the Russell, you might start seeing some better action out of those smaller capped cohorts. But for now, it's like not even worth looking at for the time being. I'll look at intelligence. If I can find it. So what do we have for this week? Okay, SPXL rated bullish. That's the S&P. Short silver rated bullish. So metal, silver, maybe metals in general under pressure. The dollar's been ripping. It's at like, I don't even know how many over 52-week highs. It might be like 15, 16-month highs, something like that. Up around 97. Okay, this is kind of funny. Russell, the Russian ETF, is rated bullish, and there's been a lot of geopolitical tension over in that area. What with troop movements and conflict with Ukraine and all of this stuff. It's kind of funny that the Russian stock market would be rated bullish for this coming week. And then, okay, so MIDU mid caps rated bullish. So I guess maybe, the rally started with the big stuff, obviously Apple, Microsoft, things like that. And they sort of muscled the NASDAQ flat, muscled the S&P green for the week. But now maybe if the bounce starts broadening out a little bit, you see a little bit of an outside move from the smaller stuff, mid caps and everything to broaden the bounce, which would be pretty healthy. But I don't know if you're going to see that right away, because it seems like a lot of the everything is basically correlated sort of 1-to-1 right now, and everything's just a beta trade. So if the indices are down, then everything's going to be down. The large caps will be down a little less. The smaller stuff will just be down a lot more. So until you start to see actual sort of real sector rotations or rotations into certain parts of the market, then I think you're just better off sort of playing the indices, and then also just avoiding these, I'm going to say under 50 billion cap. There's really just no need to trade them, just because, if the market's going to be up, then your large cap stocks are going to be up. If the market's going to be down, your large cap stocks will be down a little less. The smaller stuff isn't outperforming on the way up. It's only it's only underperforming whether we're up or down. So why even bother is sort of the thinking. Now I will highlight. Last week talked about we had these hybrid oversold signals on 12-month algo. They clustered, they went back to back here, and then we got another one midweek this week. So 26 would have been Wednesday. So these clusters of oversold signals, especially on these higher time frames, are sort of really good for sort of finding a durable low, at least for the time being. Now, there's obviously huge ranges in this. I mean, you see how the volatility is very high, especially something like this week. I think we had days where the NASDAQ had daily range of 700 points or something. So, you wonder, okay, how can I even trade that? Well, you know, you have to manage sort of your risk, but ideally when you see this, and even if you have the large ranges, you're still focusing on the buy side. You just have to be a little careful with your entries rather than just going all in at any one time, because then you might just have to due to risk management you might just get blown out of your position with the whipsaws. So but as far as the signals go, yeah, so based on last week's sort of back to back, I sort of said this week, I would just be looking to exclusively buy dips. Some of the dips were really big, but if you were sort of focusing on buying the lower end of the ranges, then you probably didn't get hurt too bad this week, and you made out pretty well by Friday if you were able to keep everything together, which is tough, but that's where you have sort of these tools to guide you through at least what your game plan should be. As for next week, I would personally be looking for some extension of Friday's rally. Now, it's I'm not going to say it's likely, but it's certainly conceivable that we give back some of it on Monday or Tuesday or something. But depending on the action when that happens, I think you could be setting up like a bit of a launch point for testing some higher levels. So the first levels I would look at are post FOMC highs, which I think were actually, I'm not even going to guess the numbers because I've seen so many numbers this week that I don't even remember what was what. But post FOMC highs on something like the NASDAQ and the S&P, and then seeing if there's going to be some sort of rotation toward a little more of the underlying, more of the mid caps, the smaller cap stuff. I don't think there will. I think we're mostly stuck playing the larger stuff in the indices for now. But if that does start to happen, that would be I think really constructive for at least the next few weeks. Remains to be seen if this is sort of an opening salvo of a larger drawdown. But for now, I think sort of the bottom is basically in for at least for. I'm going to say we're not going to test this past week's lows next week. We probably won't even test them the week after that. So you're looking at a couple weeks of where you can sort of focus on buying dips and managing trades that way. It will also be possible to probably be short at points because the ranges are likely to remain larger than normal. But I think for swing purposes, you're better off just focusing on the long side for now. Yeah, so crazy week, definitely the wildest week that we've had in the markets since probably the COVID sort of crash. Those couple weeks, I think those couple weeks between, it was mid-March, maybe March 11th or 12th to about the 20th or 23rd. I mean, that was the sort of action we were having this week too. It was like, you know, open down 400 points, NASDAQ rallies 500 to go green for, 5 minutes, and then, gives it all up to end the day or something. And then the next week opens, somewhere totally different. It was like that. So you don't see these periods very often. It's hard for the market to sustain these sort of, this much volatility in such a compressed period. So you'd be looking for some relief here, the next couple of weeks for it to die down a bit. So that's about it. There's a lot of stuff going on this week. Hope everybody, at least, if you didn't make a ton of money, hope you didn't lose a ton of money, because that would have been a bit tragic considering the indices closed mostly flat or up. But we had a bit of a game plan coming in, buy dips, and if you sort of ignored all the noise and stuck to that, then it worked out decent for you. Next week anything goes, but I'd be looking for a bit of an extension of this rally by the end of the week. So thanks for tuning in, and back at it on Monday or Sunday night for some of you futures traders, and we'll be back next week to see how it all played out. Talk to you later.